Hello friends, welcome to my channel Finance Eco India, and today we are diving into a significant development in the Indian financial markets, the initial public offering or IPO of National Securities Depository Limited or NSDL. This isn't just another IPO, it's a monumental moment for India's capital market infrastructure. Crucially, we will explore its potential implications and effects on its long-standing peer and the currently listed depository, Central Depository System or CDSL. Understanding this dynamics is key for any investor in this space. To truly grasp the significance of NSDL's IPO, we first need to understand the fundamental role of NSDL and CDSL. Think of them as the custodian of your digital wealth. NSDL or National Security Depository Limited was the pioneer established in 1996. It was India's first depository. Its primary function is to hold securities like share, bonds and mutual funds in electronic, dematerialized form. Before depositories, physical share certificates were cumbersome and risky. NSDL, backed by institutions like NSE and IDBI Bank, revolutionized this by making holdings and transferring securities safe and efficient. NSDL has historically served a large base of institutional investors, the big player in the market. As of June 30, 2025, NSDL has over 4 crore active investor accounts. Following closely, CDSL or Central Depository Service Limited was established in 1999, promoted by the Bombay Stock Exchange (BSE). CDSL performed the same critical function, while both offer similar services. CDSL has generated a significant market share, especially among retail investors. As of May 2025, CDSL boasted over 15.29 crore investor account, significantly outnumbering NSDL's active client account. In a sense, NSDL and CDSL are the backbone of India's paperless securities trading system. They ensure the security holding and seamless transfer of securities, making the Indian capital market robust and investor-friendly. Their significance lies in providing trust and efficiency, paramount for any thriving financial ecosystem. Before we deep dive into NSDL's specific IPO details, let's quickly demystify what an initial public offering or IPO truly is. An IPO is essentially the process by which a private company offers its shares to the public for the first time. It's how a company transitions from being privately owned to publicly traded on a stock exchange. The primary reason companies go public is to raise capital. This fresh capital can be used for various purposes: funding expansion, investing in research, paying off debt, or providing liquidity to existing shareholders. The process is rigorous. It involves hiring investment banks, filling a detailed prospectus with SEBI, and presenting to potential investors. Once shares are priced and allotted, they are listed on a stock exchange, making them available for public trading. For investors, an IPO offers a chance to participate in a company's growth story from an early stage along with increased transparency. After much anticipation, NSDL is finally set to go public. This is a pure offer for sale or OFS, meaning the company itself will not receive any proceeds. The fund will go to the existing shareholder who are divesting a part of their stake. The subscription window will open on July 30, 2025 and close on August 1, 2025. The pricing band is fixed at Rs 760 to 800 per equity share. The IPO is entirely an offer for sale up to 50 crore 1,45,000 equity shares. Total issue size. This translates to an issue size of between 3,811 crore and 4,011 crore. Major shareholder offloading stakes include IDBI Bank, National Stock Exchange, NSE, Union Bank of India, State Bank of India, HDFC Bank, and SUUTI. NSDL shares are proposed to be listed on the BSE with a tentative listing date of August 6, 2025. The strategic importance of this IPO for NSDL is significant. Listing enhances brand visibility and provides liquidity for existing shareholders. NSDL's business model is robust with revenue from core depository services and notably over 50% of its financial year 25 revenue from banking services by NSDL Payment Bank Limited, showcasing its diversified streams. NSDL has shown a strong financial performance. For financial year 25, its revenue from operation grew to 1,420 crore and consolidated profit after tax PAT increased to 343 crore. This solid track record, coupled with its market leadership in terms of number of issuer and value of assets under custody, over 5 lakh crore as of June 30, 2025, makes the IPO attractive. The announcement of the NSDL IPO has certainly created a buzz. Depository services are a duopoly in India, making NSDL listing a significant event. Market reaction have been interesting. While NSDL's IPO was anticipated, there was a noticeable shift in investor sentiment, particularly concerning CSDL. On the day of the NSDL IPO announcement, CDSL share experienced a decline, dipping by nearly 4% on July 28, 2025. After a disappointing Q1 financial year 26 profit report, this shows how a strong competitor's entry can influence market dynamics for existing players. Investor sentiment for NSDL IPO itself appear positive. The grey market premium or GMP has been hovering around Rs 145 to 155, suggesting potential listing gains of up to 18%. This indicates strong demand and optimism. Analysts are comparing NSDL valuation to CDSL at the upper price band. NSDL's price to earning ratio stands near 46.6, notably lower than CDSL current PE of around 66. This valuation difference is a key factor for investor. The sentiment is a blend of excitement for a new, strong market infrastructure player and a watchful eye on how the competitive landscape will evolve. What does NSDL IPO mean for CDSL, which has enjoyed a unique position in the listing depository space? The primary impact will be on competition dynamics. While NSDL already competes with CDSL for services, its listing brings it into direct competition in the stock market. CDSL has been a favorite among retail investors, holding a significant share of demat account. NSDL, on the other hand, historically caters more to institutional clients, holding a higher average value of assets per account, around 1.25 crore for NSDL versus 5 lakh for CDSL as of December 2024. Post-IPO, NSDL will gain more visibility and potentially a large investor base. This could intensify competition for new client acquisition, especially if NSDL focus more on retail expansion. However, their core customer base have different, which might mitigate some direct competition for a specific segment. The dip in CSDL price reflects a degree of portfolio rebalancing and increased scrutiny as investors now have two listed choices. Ultimately, the competitive landscape will evolve. While CDSL has established itself as a retail favorite, NSDL listing and its institutional strength mean that both will vie for market share, particularly as the number of demat accounts in India continues to surge. What does the future hold for NSDL CDSL and the broader depository service market after this landmark IPO? The overarching trend for both depositories is undoubtedly growth. India's financialized journey is robust, with the number of demat accounts surging to 19 crore in 2025. This upward trajectory is expected to continue as more Indian participate in the stock market, directly benefiting both NSDL and CDSL. Both entities are at the forefront of financial digitalization. Innovation like e-voting and e-KYC will continue to drive their services. We will anticipate heightened competition not just on pricing but also on service innovation and technological advancements. Both NSDL and CDSL will likely invest more in their platform and customer outreach. NSDL's diversified revenue stream, particularly its banking services, offer a different growth avenue compared to CDSL's more concentrated depository focus. This could be a significant differentiator in the long run. The IPO itself will bring more scrutiny and transparency to NSDL, which is positive for the market overall. In a sense, while the NSDL IPO introduces a direct peer competition in the public market, the fundamental growth drivers for both depository remain strong. It's a dynamic phase for India's financial infrastructure. To summarize, the NSDL IPO marks a pivotal moment for India's financial infrastructure. We have introduced NSDL and CDSL as the pillar of our dematerialized securities market and explored the specifics of NSDL offering. Crucially, we analyze the market reaction, including the immediate impact on CDSL share price and the broader investor sentiment. The IPO will undoubtedly intensify competition, but the underlying growth in India's investor base suggests a positive outlook for both depositories. As investors, it is vital to stay informed about these developments. The performance of NSDL and CDSL will serve as a key indicator of India's capital market growth and digital adoption. We hope this deep dive into the NSDL IPO and its implication for CDSL has provided you with valuable insights. If you find this video helpful and informative, please give it a thumbs up, share it with anyone who might benefit, and most importantly, subscribe to Market Insights for more in-depth analysis of financial market events. Don't forget to hit the notification bell so you never miss an update. We would love to hear your thoughts. What are your predictions for NSDL post-IPO? How do you think this will affect CDSL in the long run? Share your comments below. Thank you for watching. We will see you in the next video. Thank you and Jai Hind.